long-term chart, we are looking at a trend reversal trade after an extended price trend, wave 9. We had a failed 9, now we've got a wave 9 we're working on, so we're looking to go short here based on the EagleEye trade. So that's what we're doing. So we'll see what happens here. We've got our 3 times time frame set up. Okay, so the good news is, let's look at what we got. We got a double top, maybe mini divergence actually setting up here for the high. So that would give us a high probability cycle high. Over here we also have mom angling down on the long-term chart, which is great. Love to see mom angling down on the long-term chart for EagleEye trades. So, I mean, it's always the same. The more evidence you have, the better. So right now we've got a KD cross. We've got a mini divergence setting up. And we've got mom angling down. Over on the long-term chart, or the short-term chart, we also have something that's great. And that's what we call the concurrent setup. So concurrent setup means you've got more than one setup. So in the long-term chart, we're looking at the trend reversal. But here on the short-term chart, we also have a first cycle high after dad turns down. So we could take this either as a scalping trade or as a EagleEye trade. Now, for our confirmation chart, 900 tick chart, again, we've got a double top, second chance pattern. So again, very high probability cycle high. Notice we got concurrent cycle highs on all 3 time frames, but 2 of them are giving us really, really high probability setups here. So that is great. We love that. And mom's angling down. On the midterm chart, also, we've got a 5-wave uptrend on mom. So that's an extended uptrend on mom. So that means we're looking for momentum to now move toward the downside, which is great because we're trading short. In fact, actually, I'm looking at so many things here that we've already gone short. We went short 1 tick below the low of that bar over on the short-term chart. That's our trigger chart. And so that is our entry, and we've already gone way beyond that, of course, as you can see. Okay, I was talking fast trying to get it all in just to show you the reason for taking the trade, what the setup was, and all the good confirmation stuff. Now, this was our first support level, which was the 50 MA on the short-term chart. Didn't give you a very good risk-reward ratio, but if you notice, price just sliced right through it. Also, that also was pretty close to where the 15 EMA is on the medium-term chart. So what we do with our exits is we're looking for where we would put in a cycle low concurrent with a support level. Another support level we're looking at here that hasn't been hit yet, but is coming up, is the 15 EMA on the 2700 tick chart. All right, and so we haven't hit that yet. So that's it. Okay, now we'll have to just watch the trade develop. If you wanted to, what we do is we look at resist support in confluence with a cycle low, and then we also watch bar price action, or price action, when we come into that zone. So sometimes what will happen is if the market's moving down pretty aggressively like it did here, if you look at the 300 tick chart, then again it just sliced right through that 50 MA. It did not stop there. And so sometimes what I'll do is I'll just go ahead and I'll stay in. This is where kind of your skill and your experience comes in, and wait for maybe a pause or doji bar like we had two neutral bars there after the big down red bars, and now we got another big red bar coming, and maybe take my first exit there or something like that. So that's where a little more skill comes in. That comes from experience. Boy, look at this thing go. And what we look for is price bar pattern, velocity, and angle. And these are things that I cover in my new advanced trading course. And they help you to find better places to exit the market when you look at all of those in conjunction with support and the cycle indicator. So in Foundations Course 1 and 2, we just talk about support and the cycle indicator and the confluence of those. But as you get more advanced, then you also can look at price bars and see how that they're, what they're doing around those levels. See, now we're getting some pretty fast action coming in here, and that velocity is meaningful. That means something to me as I watch that. That's very bearish action as that's happening. By the way, if you want to get the advanced course, it is on topdogtrading.com/products.html, but products is spelled with a capital P for products. It is case sensitive. And scroll down to the bottom, and it's down toward the bottom of that page. Also there, if you're really interested in learning more about price bars and price action, I actually have a course on that as well. And that course is specifically on advanced price patterns and candlestick formations. I've got my own way of reading candlesticks that's a little different. You know me, most of the stuff I do a little different than is traditional, and I think the hallmark of my unique approach is to take what other people have done that's classic or traditional and simplify it. I take the concepts or the ideas, and see, to me, the concept or the ideas are very important. It's not just about back testing or out-of-sample forward testing. It's does it make sense? So, for example, just looking at these red bars here, well, the fact that on each of these red bars, we open near the high, we close near the low. That just is a logical way for a bearish bar to be. So that's just a very, basic, simple example. All right, but anyway, if you want to learn more about price action, then that's really the course, Advanced Price Patterns and Candlesticks. Okay, so here, this is a parabolic move, talking about price patterns. Parabolic moves are very steep angles, up or down. Not perfectly vertical, but pretty close to vertical. And they are traded differently than the regular sine wave patterns. The parabolic moves are actually seen better on the longer-term charts than on short-term charts. So, and they're also better seen on time-based charts than tick charts. So we got the beginning of this parabolic move here on the 300 tick chart, but it's not quite as clear as it was on that 900 tick chart. But when you get the parabolic move, one of the things it tells you is don't expect your support level to hold. Expect it to slice through support, and then typically there's a little pause, just like there is here with these neutral bars that I talked about before. And so this is one of the distinctions, more advanced trading can help you, where you can improve your risk-reward ratio by knowing what is typical of a parabolic pattern. A steep move, a pause, and then another steep move down. And that's really basically, it's a 1, 2, 3 move. Now it's not a regular wave count move, but that's basically what's happening. It's a wave, it's kind of a 3-segment move on a parabolic move. Now, going back to the 2700 tick chart, we got below that 15 EMA. Again, notice there was no sign of any hesitation at that support level. And it's just sliced right through that 15 EMA on the 2700 tick chart. So again, knowing these price patterns, see we have that big red bar before it, and that first big red bar down right before the live bar that's live right now. All right, my dog started barking. I'm back, and had to take care of them. So so now we're just waiting to see how far we can go here. So let's analyze what we've got so far. With these parabolic moves, by the way, these rather vertical price patterns, as I said, they often will slice through a support level, and what's interesting is they'll slice through 1 or 2, usually just one or two significant ones, and not more than that. But sometimes you get more than that. Just depends on what's caused the move. If it's really, really, really dramatic news or something like that. How enthusiastic the market is responding to whatever event caused that dramatic and fast move. See, that's what's characteristic of these, what I call parabolic moves. Again, they're just really sharp angles. Is that they move a long range in price in a short period of time. So that's why they're long vertical and narrow in time. So, okay, we're getting a little bounce here. So now we're looking for it to go up. Our next resistance level, obviously, is the 15 EMA here on the short-term chart. So we're looking for it to go up there and hopefully hold, and then get our next leg down. And okay, we've already come up there, touched, and boom, now we're moving back down. Notice on the 900 tick chart, Mom is already angling down. So this could also be a first retrace in a trend. Now, what's interesting too, 900 tick chart, we got cycle low over there, so we don't have concurrent cycle highs. Also on the 2700 tick chart, we're in the area of a cycle low as well. So when we entered, we had concurrent cycle highs on all three. All right. So that's better than this if you were to take a trade here. Although this actually isn't. This is a first retrace in the trend right there at wave 2 setup. But after a vertical move, we usually don't take the first retrace down. We do have a nice spike top reversal bar there, though. And so that also, as far as candlesticks go, is a candlestick pattern that often marks cycle highs and lows. Over here on the 2700 tick chart, got to learn to speak. Now, you know, we're in the area, obviously, of a cycle low. K's down below 20. Took him back up. I don't take, now a lot of people might say, well, does that mean, you know, we got to hook up here on K, so does that mean we're going to put in a cycle low and go up? Not necessarily at this juncture. It's not clear one way or the other. It's just gone down there, and it's a bounded indicator. So this is our support level that we're looking at here. This is where we are looking for the cycle low to come in concurrent with a support level. So we've hit this level here once, as you can see. Okay, and I'm looking at that blue line. Horizontal blue line. And so, you know, it's hit this position once here, and then we came in here and hit it again. So there's 2. And 3 times the charm. There's the principle of 3. And if we break, well, we would expect either it's going to break down through here, or if it bounces off this, then it's probably going to go up. So this is kind of our last hurrah, where we would expect it right in here. Now we've got a confluence of that blue horizontal line and the 50 MA here, of course. Again, we're coming down pretty vertical, aren't we? So I would expect us to slice through this level. Now, we might slice through and then come right back up. But to take and exit your target, your profit target, right at that level would be too quick, in my opinion, because of the price action. So one thing you can do is you can go over here on the short-term chart, all right, and look for signals there. And that is not a bad thing to do. So you see we're still putting in red bars, red bars, red bars. Let's just see what we got. One thing you could do is you could do a 1-bar trailing stop, for example, which means you're just putting in a sell stop 1 tick above the high of the previous bar, which we're actually approaching now. There we go. We hit the high of the last bar. We haven't broken above it yet. And there we go. Okay, we did. So you could just take your trailing stop out right there. All right. Now, okay, our time is just about up, so I'm going to have to cut it off here. But I got more to say about this, so let's do a part 2 of this video.